Morning, everybody. Welcome back to another Impact and Influence. Today, we've got a guest back, Stuart Waugh from Altus. Stu's one of the directors there. It was one of our most ever popular interviews, so we thought we'd get Stu back. How are you?
Very well, thank you, Kylie. How are you?
Good. See, man with wise words, people listen.
Oh, please.
Busy time of the year for you, Stu, coming up April, May, no doubt.
Yeah, no, it's a good time to be, aware of where you're at as to where you've been trading. It's a good time to prepare for 30 June. 30 June is more important than New Year's Eve in our books. So yeah, it's a really good time to take stock of where you've been for the last 9 months and get ready for the next 3.
Yeah, we're certainly seeing a little bit of a recalibration out there, so it's incredibly important. And we're going to talk through that today with Stuart and some recommendations that he's making for people just to have a look under the hood. But for those that missed our last Impact and Influence with Stu, can you just give everyone a bit of an overview of your background, how long you've been servicing the real estate industry and exactly what it is that you do?
Yeah, so I suppose I've been an accountant for 27 years, and which makes it feel old, but hopefully still young. 27 years been an accountant. I suppose when I first started for 5 years, I kind of did all accounting. I kind of did every industry, and I kind of broad stroked, which is what a lot of accountants do. And then I met some pretty key influential people in the real estate business in about 2006, and pretty much just kind of hung out with them and realized that real estate's a good place to be and property is a good place to be, and it's where a lot of people make good livings. So I became a licensed real estate agent myself as well as an accountant, and then started just to focus on being a real estate accountant, and I actually really enjoy it.
Yeah, and pretty handy at it too.
Yeah, no, I've been very lucky. I mean, I've worked with the best principals in the country, principals that of which started really young, and now they've started their own franchises or their own big businesses, and with lots of managements and lots of salespeople. And I've just gone with them and advised them through the way.
I think, guys, for those listening today, over the last week, I've been with a number of the larger franchise groups, and we've been talking about the need to really have someone that you partner with in your professional services with accounting, understand the real estate sector. So incredibly important. It's a different beast, particularly with merger and acquisition and setting up structures and looking at your exit and writing your press release up front. What would you say to that, Stu? Yeah,
I suppose you need to be structured to be big. You can't be big without being structured to be big. You need to be attractive, because retention and attraction of staff and talent is really important. And unless you're structured to attract staff, then you won't get staff, and then you'll be left behind. So it's really important as a growing business to be ready to be big, because if you're small and agile, then you need to be big and agile, and the only way to do that is to structure yourself properly.
I think it's probably a really good place to start is talking around that scale and retention of talent. And we are seeing the recalibration, and some people make really good decisions in a recalibrating market, and some people panic and don't make good decisions. So what are you seeing out there, particularly with respect to structure and decisions being made by principals moving forward with respect to talent?
Yeah, I suppose at the moment, people want certainty. We're in a market right now where people don't know whether interest rates are going to go up tomorrow or down, or just stay solid. They don't know a lot of things, and so they're looking for consistency, and they're looking for somebody to tell them things are going to be okay. And usually that's going to be experienced, agents and principals that are in the market. And the ones that aren't so experienced, they're going to create a little bit of uncertainty, and the market's not going to run to that. So talent at the moment who are inexperienced and maybe looking to grow themselves, they need to show some certainty in the market. Otherwise, they're going to look for other things. And as principals and as agents, high performing agents, you need to look after your talent to make sure you've got those talent. Otherwise, when the market changes, you won't have that talent, and getting it back is going to be very hard.
And I think that's a thing too, particularly if you're a selling principal, which, 3/4 of our industry is. It's very difficult to try and be, a top performer and keep that top line revenue occurring and then make time for your people. But guys, if you are listening to this, please make time for your people, or somebody else will. Stu, something that's pretty topical at the moment is a few people have got a few letters from OSR. Can you talk to us around that and what the message is?
Yeah, the message is just it was always going to happen. As time goes on, things get a bit looser, and you don't look at things as closely because time goes on and you get so busy. What the OSR and the other departments are doing right now is bringing things back to zero, like back to where they should be, and looking at things to make sure they're done properly, which we all want them to be done properly. So it's not, it's not a bad thing, but I do encourage you all to take note of it, because the sooner you take note of it, the better. The sooner you can do things about it, rather than when they knock on your door, doing things tends to be very difficult.
Yeah, and guys, this comes back to the point. I mean, Stu doesn't need too much more business. He's very busy anyway, but he's more than happy to speak to you. If you have got that letter and you're concerned, please reach out to Stu, have a chat. We don't want anyone to panic, but seek the right advice. And again, I think the other thing that's really topical at the moment, Stu, we've just put on another couple of people to actually help out with the demand. I've been in the industry 30 years this year, so you reckon you're old. I'm feeling it. I've never seen so many people with a desire to acquire a rent roll, or people that have ridden a good market that were maybe going to get out 4 years ago, and then we had a boom market and they decided to stay. So a lot of movement in that rent roll space. What would you say to somebody that's either going to get their business ready to go to the bank to see what their capacity is, or someone that is looking to transition out?
Tax debt, don't have it. It's such a nightmare to talk to any banks with tax debt. So I mean, look, buying a rent roll is great. All the banks love buying rent rolls because you're buying an income producing asset, right? So they run to that because they see regularity of income. And when you're in a market like we are at the moment, regularity of income is not always the way it is. So sometimes you're lumpy. The banks love kind of recurring income, so they love rent rolls, as I do, as you do, Kylie, and as a lot of our principals do. So therefore, they want to give money to you to buy a rent roll. They want to do that. They will go as high as 70% to make you buy a rent roll. However, if you have tax debt and a bad history of meeting those debts like that, they will bring your LVR down. So you go from 70 to 60 very fast as far as their appetite to give you money because of your history of having tax debt. Tax debt's really key because tax debt, you don't need to write a form. So if you go to the bank, you'll fill out a form and say, I want to borrow $1 million, and the bank will assess you as to whether to give you $1 million. Tax debt, you just kind of comes about. So that's why the banks are very, very, very stringent on it, because they know that it's easy to get. So I would have said that, we all want to buy rent rolls. Rent rolls are very good at recurring income. They create talent, they create market share, but the only way we can get it is by having a good bank that gives us money.
Yeah. And guys, I think too, if you're listening, is that fixed cost coverage is so incredibly important with it at any time, really, not even with a changing market. And a really good thing to sit down and do with your accountant or somebody in your accounts team is having a look at what that reoccurring revenue is, your management fees. And if you've got a more established, long-standing business, is looking at your lease and your let fees and working out exactly how many managements do you need to cover that fixed cost coverage. And are you going to grow organically? And are you going to buy? And if your world's apart, 400 or 500 managements, the answer is you've got to look at buying something. So get the right advice, speak to your accountant or your bank and have a good look at it. So Stu, we've spoken a lot around business owners. I want to talk a little bit about sales agents now. This is the time of the year that people should start having a conversation with their accountant, or at least booking the meeting, rather than, ringing you and I towards the end of financial year wondering why they've made $1 million profit and there's no money in the bank. What should sales agents be thinking of at the moment who are running their own proprietary limiteds? And what are the things that they should be talking to their accountant or planning?
Yeah, so we've had a year of two markets. If we had had conversation 6 months ago, Kyle's, I mean, you and I always have conversations, so we would have had conversation then, but we weren't on a podcast like we are today. But 6 months ago, we were talking about a booming market. We're talking about prices going well and a number of sales going up. You would have all had profits and would have reported tax in those periods as to big installments based on your taxes you've been earning. But then you've come into a market of which now the market is as lumpy as we've discussed. It's time to look at what you paid in tax installments 6 months ago and see what you've got left to pay in tax now, because it may well be that you've paid too much tax in September, and then you can recalibrate that September tax to this period now, and it will save you tax and cash to basically recalibrate that now. And you need cash now. Cash is really important because of obviously raising interest rates and lumpy markets. So therefore, if you can recalibrate some of the money you've attributed to tax in, say, September, you can actually bring that into now the period of which was lumpy and say, right, well, I'm okay with cash. So it's a time to kind of look at your whole year as a whole. not look at where you are right now.
Great advice. Stu, if you were starting a real estate business tomorrow, or someone was looking at they're in maturity and they might have hit a brick wall and they've got a little bit complacent and they want to reinvent themselves, what would you say to them? What would the handy hints be that you would give them around financial stability or freedom or moving forward?
I'd say you probably need to give yourself 6 months worth of cash flow, at least. I think that it's going to be a time of which you, it's like everybody else. It's like you've got to create some certainty to yourself as far as saying, right, well, I can weather any storm that comes my way, and I can do that for 6 months at least. Now, the problem with 6 months from now, we're now in, say, April. 6 months from now is October. You should be okay to, even to like trade a little bit and say October, November to get you through to Christmas. But that's what I'm saying. When you're planning, you need to be careful about when's that cash going to run out if you don't do anything you want to do. So therefore, like if it's Christmas time, it's not the time that you're going to get past Christmas time. So you've got to plan, how long you're going to be in this uncertain period. So planning is always important. Having the right professionals around you, having people of which you can talk to about what's going on. And therefore, you can give yourself some confidence and give yourself certainty as well, because you're going to be in this period right now. If you don't have people around you that know what's going on and you can actually fall back on, then you're going to be kind of swimming in shallow waters.
Yeah. So what I'm hearing is cash flow.
Yeah, cash flow is important. It's never been so important. I have phone calls, and I encourage anybody to reach out to me, and I'm happy to talk to anybody that's part of this regrowth group. But yeah, every conversation I'm having right now, every conversation, not 90%, 100%, is about cash flow.
Yeah, I'm going to say that rent roll, DDs, preparing IMs, and I'm talking to people about fixed cost coverage, break even, and profit point is all we are doing at the moment as well. Yeah. So, guys, look, Stuart's a wealth of knowledge. We used him in the previous business that I was in. He's an expert in his game, but the thing is he breaks it down into English so you can actually understand it, which I think is incredibly important. But for our industry, it can be very intimidating. Like, a lot of selling principals are good at what they do. Don't be frightened by your financials. Stu, I'm a little bit probably terrified about how many offices I go into and principals don't even have their Xero app on their phone, for example. So that visibility around what's going in and what's going out is like a minimum standard. Is there anything else that you see, or just basic 101 stuff that you would encourage people that own a real estate agency that they should be on top of, or just as a minimum standard, things that they should know, even if they've got someone like you or someone in accounts or a CFO, just the basic stuff that they should be across?
Yeah, I'd break it down to number of sales. So we can all work out our average fee. If it's 15 grand per sale, if it's 30 grand per sale, whatever it may be, as far as the sales you make, as far as what commission you bank. I think it's important to know how many sales you need to make, because we can all sit around. Like if you go to work and say, right, I've made 4 sales at $3 million, and I've made 3 sales at $1 million. That's great, but it's hard to kind of calibrate in your mind as to how many sales I need to make. But if you can kind of go to work saying, right, I need to make 16 sales. I've got clients all the time that say to me, Stu, how many sales do I need to make to break even? And I say to them, you need to make 14 sales or 16 sales or 20 sales, whatever it may be. But I break it down to a language of which they know that's how many sales they need to make, and they can talk to their team and they know every meeting as to where they're up to. So come the 15th of a month, and they made 10 sales and they need to make 20, they're on track. Don't panic. You've made 10, you've got 20 to make. So therefore you're on track. So it's kind of, if you made 5, then yeah, you need to work hard for the back end of the month. But at least you know in simple language how many sales you need to make, and therefore where you break even, where you make profit and things like that. Because then you can go, right, I can go to my meetings with my sales team, and I know, and my mind knows where we're at. And I'm not panicking. I'm not giving uncertainty to my sales team.
Hard to believe we've been on 25 minutes. 2 more minutes left, Stu. I've got a couple of questions for you. Where do you see the biggest leakage in business?
Biggest leakage in business? Like irregularity. Irregularity. Like if you kind of don't plan for your expenses, then that's going to be a big problem. So right now, as you know, in any lumpy market, you can't have leakages in discretional spend. So things like travel expenses, if anything that's lumpy like that, like a $5 or $6 grand, that's going to create problems. So I think you need to kind of look at your expenses as far as your fixed costs and say, right, they're fixed, right? So I know what they're going to be. But the other ones that are irregular, that's going to be the biggest problem. So to answer your question, the biggest problem is irregular spend and trying to make it regular and trying to understand it.
Okay, one question to go. Sort of doesn't relate to finance, but maybe.
That's right.
There was one thing that you could change about the real estate industry, what would it be?
I think it's kind of like it's working. I mean, I think working hard and having your clients believe that you work hard, like showing you work hard, showing that you invest time in them. I think that the after service of sales is a problem in the industry. Clients feel that you sell their property and then you never speak to them again. So
Yeah,
that's right. So I sold your property for $4 million or whatever it is, or $1 million or whatever it may be, and then you don't speak to them. So the biggest thing I would change is I have clients obviously that aren't real estate agents, and I say to them, you need a real estate agent, and they go, I don't like real estate agents because they sell my property and they never speak to me again. So an accountant has like the year to look after a client. So they like accountants because they talk to them about the tax return, but then they talk to them about advising them. They're always talking to them. They like accountants. But real estate agents, my biggest advice, and I suppose I think the biggest thing I would change is the after service of a sale. You need to like have an after service of your sale.
I think it's great advice. And we're great at our appraisal checklist, our listing, our exchange and settlement, but what does your post-settlement look like? And that client nurture for life. And if they work out their cost to serve with you, Stu, they might change their mind on that.
Well, so.
Stu, thanks so much for your time. If people want to reach out afterwards, how do they get in contact with you?
So, I mean, you can call my mobile, 0451 759 631, or on the website, altusfinancial.com.au. I'm on the website, obviously. I'm on email. Email Kylie. Kylie and I have been friends for the best part of 20 years now. So reach out to her, but I'm more than happy to speak to anybody. And as I said, part of the regrowth team, there's no fee to talk to me. Just call me and we'll talk about it.
Fantastic. And we'll share Stu's details in the copy that goes with this as well. Stu, thanks so much for your time. Have a great Easter. And everyone, thanks for listening.
Thanks, guys. Thanks, Kylie. See you soon.